In the world of global power, there is a weapon more silent than a submarine and more influential than a nuclear warhead. It's a green piece of paper. For decades, the US dollar has been the world's oxygen. You need it to buy oil, you need it to settle debts, and you need it to keep your nation's economy breathing. But for the first time since 1944, the world is holding its breath. From the skyscrapers of Shanghai to the desert palaces of Riyadh, a silent rebellion is brewing. It's called de-dollarization, and in 2026, this isn't just a conspiracy theory anymore, it's a mathematical reality. Why is the world quitting the dollar? And if the king falls, what happens to your savings, your business, and the global order as we know it? The foundation of the king. To understand the collapse, we must understand the crown. In 1944, as World War II ravaged Europe and Asia, 44 nations met in a small hotel in New Hampshire. The goal was simple: create a new financial system. Since the US held 2/3 of the world's gold, the dollar was tied to gold, and every other currency was tied to the dollar. This worked until 1971. When the US couldn't back its spending with gold anymore, President Richard Nixon did the unthinkable. He cut the link. The dollar became fiat, backed by nothing but the full faith and credit of the US government. But how did it stay powerful? Enter the petrodollar. Through a strategic deal with Saudi Arabia, the US ensured that every barrel of oil on Earth would be sold in dollars. If you wanted energy, you needed dollars. This created a permanent global demand that kept the American economy invincible, until now. However, today that foundation is being tested. Rising US debt, persistent inflation fears, and repeated use of financial sanctions have caused many nations to question their reliance on the dollar. Countries like China and Russia are actively reducing dollar reserves, while emerging economies are exploring trade settlements in local currencies. The rise of BRICS cooperation, alternative payment systems, and central bank digital currencies signals a slow but deliberate shift away from dollar dependence. Despite its challenges, the dollar remains deeply embedded in global finance. No other currency currently matches its liquidity, stability, or institutional trust. The euro struggles with political fragmentation, China's yuan faces capital controls, and cryptocurrencies lack regulation and scale. The king's throne may be shaking, but there is no clear successor ready to replace it. What we are likely witnessing is not a collapse, but an evolution. Weaponization. The beginning of the end started not with an economic crash, but with a political choice. When the US froze Russia's central bank reserves in 2022, they sent a shockwave through every other central bank in the world. The message was clear: if the United States disagrees with your politics, they can flip a switch and delete your national wealth. Nations like China, India, and Brazil realized they were trapped in a system where they had no sovereignty. This is why we see the rise of the BRICS Plus. They aren't just an alliance, they are an escape pod. In 2025 and 2026, we've seen Saudi Arabia, the very pillar of the petrodollar, start accepting yuan for oil. The deal that sustained the dollar for 50 years is officially cracking. This shift does not mean the dollar is collapsing overnight. The dollar still benefits from deep financial markets, strong legal institutions, and unmatched global liquidity. No alternative currency currently offers the same stability, transparency, and scale. However, the trend toward de-dollarization is real and increasingly strategic rather than symbolic. The weaponization of the dollar may therefore be a double-edged sword. In the short term, it strengthens US leverage. In the long term, it incentivizes competitors and even allies to build parallel systems that weaken dollar dominance. Over time, this could lead to a more fragmented global financial system, where the dollar remains important but no longer unrivaled. So, is this the end of the dollar era? Not yet, but it may mark the beginning of a transition from a unipolar currency system to a multipolar one. The dollar's future will depend not only on US economic strength, but on how responsibly its financial power is used in an increasingly interconnected world. Debt trap. But the threat isn't just external. Inside the US, the numbers are becoming unsustainable. The national debt is now a mountain that grows by $1 trillion every few months. To pay the interest on this debt, the US has to print more money. This dilutes the value of every dollar in your pocket. This is why, despite technology making production cheaper, your groceries, your rent, and your fuel are more expensive than ever. The world sees this. They see a superpower that is borrowing money to pay back the money it already borrowed. For central banks in the global south, the dollar is starting to look less like a safe haven and more like a sinking ship. As trust begins to erode, other nations start looking for alternatives. Countries like China and Russia are reducing their reliance on the dollar by trading in local currencies. Some nations are increasing their gold reserves, while others are exploring digital currencies and new payment systems that bypass the US financial network. These moves may seem small individually, but together they signal a shift in global thinking. However, declaring the end of the dollar era may be premature. The dollar still dominates global markets because there is no true replacement. The US financial system remains deep, liquid, and relatively stable compared to its rivals. Even in times of crisis, investors often rush toward the dollar, not away from it. The debt trap does not mean the dollar will collapse overnight. Instead, it suggests a slow transformation. The world may move toward a more multipolar currency system, where the dollar remains powerful, but no longer unquestioned. Conclusion: the multipolar future. So, is the dollar going to zero tomorrow? No, hegemony doesn't die in a day, it dies in stages. We are moving toward a multipolar financial world. A world where the yuan, the euro, digital assets, and gold all share the stage. The American century is transitioning into something new, something more fragmented, more volatile, but perhaps more balanced. The question isn't whether the dollar will fall, but whether we are ready for what replaces it. History teaches us that no empire lasts forever, and neither does its money. This transition also reflects deeper geopolitical changes. As economic power becomes more distributed across regions, financial influence naturally follows. Globalization is no longer driven by a single center of gravity, but by interconnected hubs with competing interests. In such an environment, flexibility and diversification become essential for nations, corporations, and investors alike. In conclusion, the future of global finance is not about the fall of the dollar, but about the end of absolute dominance. The dollar will likely remain the world's most important currency for the foreseeable future, but it will operate within a more complex, competitive, and multipolar system. Understanding this shift is crucial because the next era of global finance will be defined not by one currency ruling all, but by balance, competition, and adaptation.